Okay, what's up, everybody? Um, I want to go through a couple of the trade, well, not trades, but the price action from last week for gold, Nasdaq, as well as copper, and kind of see what opportunities I missed. I know I did miss some, and what opportunities were there for me to be able to take, right? Um, and see what the potential risk reward could and would be based off of um, profit targets that could have been hit, right? So, first things first, let's. How do I want to do this? I'm not even too sure how I want to do this because it's the first time I'm kind of doing it. Um, I'm gonna stay like this, and we'll kind of see how it goes from there. 'Cause I'm just gonna kind of break down what I see for the week and the movement for the week. So yeah, this is gold. Something I had a trade on this week. Um, or sorry, last week. So yeah, let's kind of break it down. So first thing off, this is open. All right. Can't really do too much more outside of that, just because of how expanded it was. All right, so gold, all right. So here we have a push down, push back up. We clearly have a level of resistance here or equal highs all up in this area here. Pretty much all of this is an area of resistance. And you can see price breaks out of that resistance area right here. So I'm just gonna do that. Makes it a little easier. You can see price breaks out of that resistance area here, right? And this is actually a trade that I took in here on the 15 minute. So let's cut on down to the 15 and see what's going on. So actually, this is a little bit clearer on the 15 minute like this, I believe. A bit easier to see because now we in here like swimwear. And you can see this is actually the area that price wants to not or wants to stay in. You don't really want to go above this level like this. Like so you can see what happens, right? You can clearly see the waves of price as well. So you have the low, you have the high, you have the low, you have the higher high, and now we come down into a lower low. So this is actually the trade that I took in here. I'll show that in a moment. So based on this price action, we have this low, this high. We're very clearly in the discount of the leg. And what I saw at the time was um, equal lows or area of resistance in a bigger bullish. So we're clearly bullish on the 15 minute, right? But I also see that we created these equal lows to the downside that's acting as a floor. Price pushes below that floor. Um, yeah, price pushes below that floor, which would indicate then that we should be going bearish. But the moment price comes back above, I already know that means we're going much higher. Um, because clearly price does not have any sellers in that market. So that's actually exactly what I did, and I was able to enter here, stop low like that, and I had a 3.67 TP somewhere in here like that, and I was targeting. What did I target? Oh, I did the two standard deviations of this move right here. I didn't even look on a higher time frame to see what the position is, unfortunately. Yeah. I think my stop was a little bit smaller, something like this, and yeah, like this is kind of where we were at. It was 3.67 when I did it. Oh. So that's the first trade. But again, I'm only looking at this from a 15-minute perspective. If I'm able to zoom out, all right, where could I have taken this trade? What could have happened in this trade? The first thing I see is this right here is clearly the first target. Now, why am I saying that? If we're looking at this from a 4-hour perspective, now we've got a high, a low, lower high, lower low, and then from here, we're bullish. New higher high. So this is the 4-hour leg that we're working in. We're bullish because of that 4-hour leg. Now, understand we're bullish from that 4-hour leg. That means price should be coming up to this point at a minimum, which is pretty much what, not pretty much. We went way, 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 way higher than that. But that could be the first area that we could have looked to target easily. We already just doubled our profit. All right. Um, in my honest opinion, when I look at this, I personally think the easiest area for us to target, obviously hindsight is 2020, but it's actually this. Anything from here onwards is extra, and that's you can't look to target that right away from how I trade. All right. Now, why do I say this second point here? Well, there's something called trendline liquidity that I look at. And you can kind of see it like this, where let me delete this because it's starting to get a little confusing. Trendline liquidity that we could have looked at, right? So all these highs are pretty much in a very close area. And if price is going up, it's going to need some form of liquidity to take. And that's what we get at this point here. Um, which is dating all the way back to Sunday, 21st of June. So that's 6 weeks worth of price action. There's a lot of liquidity there, especially since we've pretty much been in a consolidating that entire time. There's a lot of stop losses there, and there's no real suggestion to say that this is a floor or a ceiling, support or resistance. There's nothing telling you that. All right. So yes, I think that would have been the first area. Well, this would have been the full TP of this particular trade. So if I just draw this across here now, we can actually see this would have been 11 hour trade. I think that's the best we could have done out of this particular situation. And I think that would have been a fantastic trade to take. Um, and I'm not maybe not right this second, but I'm definitely gonna be looking to keep pushing those trades a little bit longer. Um, going into the future. Because really and truly, this wasn't even really holding a day. Um, or was it holding a day? 12 hours, right? Funny enough, I took that at night. I went to sleep. I woke up in the middle of the night and my TP was hit. I was like, yo, we hit already? Because I was actually going to like remove the take profit and go break even. Um, but yeah, obviously that didn't kind of work out. So that's the first thing. Second one is once we're ready this extended, we don't really want to be taking a trade anywhere up here. That's where we start running into issues. But what we could do is once, price comes in and gives us a little bit of a pullback, which you can see there on the 4-hour, that's when we can start looking for longs again, in my opinion. And a nice area for that would have been pretty much in here, where we clearly have that floor that's built. Price pushes down. Oh, that might be cleaner on the 15. Let's do it on the 15. Yeah. You can clearly see here, price pushes up, pushes down again, and then it starts, we start building that floor, right? Where Um, actually, I took a very small loss in here. I closed it early because prices wasn't making any sense. I think I was just too early. So you can see we have the floor here. We have this. I saw this as a potential entry here at 9:30. I got in here. Whoops. So I took a very small loss because I manually closed it because I was like, this doesn't make sense. Like this, and I was going up. I think it was like 2R pretty much on the dot is kind of how I was looking at it. But I digress. So here's how I was saying it again. Once I saw this in here, and I saw how strong this was, as well as the fact that we didn't get any closes above the wicks. So we're looking at this wick here. There was no close above the wick. So really and truly, this is kind of null and void. So I actually got in on this specific candle. And then when I start looking at the next wick, we didn't close above that either. And now we're starting to get bearish engulfing candles to the downside. I was like, yep, I'm gonna hop out. So a small loss. I think it was I don't know how much money it was, but it was a very small loss. Maybe like a tenth off or something. Anyways, so when that happened, I was like, I don't like it. I closed out. And I just patiently waited. I saw price building up these equal lows again. And this is where I kind of failed as an operator trading. So nighttime comes around 8 o'clock, 10 o'clock. Um, I see that we have, for looking at structure, right? We go high, lower, low. This high should push us lower. It fails. Price comes up, creates a new higher high. Price goes right down, creates a new lower low. What does this mean? A new lower low comparatively to this high, to this low. So what does that mean? Oh, to me, that means all right, clearly price now wants to go lower. We need to get more confirmations because we are at a higher time frame area of support. So when price comes from our high to our low, and now we create a new higher high that closes above previous area. So I'll show and dictate here. So we have these wicks here down there. I might just do that again. We clearly close higher. That's where my entry should be at 9:30 p.m. And I was watching. I was like, I don't know. I'm a little skeptical, but nah, everything was there for me to be able to take that trade. And if it was a loss, then it would have been a loss. Stop would have been below this specific low. Target would have been 2R as I had said. Wait. Yeah, that would have been 2R, but looking back, I would have done for really being honest, it should be this as a two standard deviations, so it should be a little bit lower than should be something like this. It's pretty much these equal highs. A little small for me, but I would have gone 2R as I said because it would have been a little tight. But yeah, price just kind of did its own thing and kept pushing, which is great. So those were the two valid trades this week on gold specifically. I don't think there was anything else in gold this week that you could have confidently taken. I think those two are the easiest ones and the most confident ones you would have been able to take without a doubt. So yeah, that's gold. Let's move on to copper. Copper was something a little bit similar, where there's bullish and there's bearish options on copper this week. So this is Sunday, right? Yeah. So let me just refresh here. If we're looking at copper, copper is something that likes to flow, right? So you'll see um what copper likes to do, right? So you get high, low, lower high, Now we get into a lower, well, we get into no man's land. But then you see from this point we push up higher. And now this immediately means that we're bullish. So now we get into lower high, sorry, high high, higher low, higher high, higher low, highest high, right? And that's how we start to flow. And copper loves to trend like that, where low, high, and it's very easy to take these weekly trades on copper. Now, let's start here. Because why here? Because this is where price is starting for the week. So if we're looking at this, there's absolutely no there's this. Yeah, money. There's no real information here except that the fact that we should be looking for longs. So if I go to cut down to the hour, still there's no real information that tells us anything except we should be looking for longs. There's nothing too important here. How I broke this down and did not take this trade and should have is high, low, high, sorry, low, high, low, high. We should be looking somewhere in this area to be able to look to buys to go higher. And this is actually a trade I did not take. So cut down to the 15-minute and I'll show you exactly where it is. Pretty similar to the gold trade, which is we have equal lows here. We've clearly created a floor. Floor is created. Now it's a matter of how do we trade out of this floor. The entry I was taking on this is not a very typical entry, to say the least. Um, I was honestly just gonna pull the trigger on this candle right here. This is the low. Sorry. This is low, and we look to target much higher. Why am I pulling it like this? There's something called a V-shaped recovery. The price aggressively pushes lower, taking out in liquidity, all liquidity that's available, and then we aggressively push back bullish. And I saw this, and I was like, "Oh, that looks very V-shaped recovery." Why is it called a V-shaped recovery? Because it forms a V. V shape. Aggressive push down, aggressive push out. And whoops, and that's what I was looking for, and that's the trade that I didn't take. Now, where this one would have been beautiful to take, two, was I use the standard deviations as this is the last push down into the push out. So now that we're pushing out, where do we look to target? Two standard deviations at 5R trade, and you can see we pretty much come smack dab into that, and then we push away, and then we do whatever else afterwards. But that would have been a really good trade for me this week, and that would have actually been the first trade of the week that I would have taken, and I liked it. But I just didn't have the confidence to take it at the time. But I think doing this right now is kind of reinvigorating me a little bit to be able to take that type of trade going forward. So yeah, that would have been the first trade. The second trade on the copper was actually up here. Um, so as we were talking about prior, copper likes to do up, down, up, down, up. Sorry, mosquito. Up, down, up, down, up, down. And it likes to trend. Here we're at all-time highs on Thursday. Price comes down and pushes lower, essentially creating a new lower low on our chart. And when I look at the 15-minute, this is where we I could have really looked to capitalize on some stuff. So this is our break. We can see price comes higher, lower, higher, lower. Here is, to be quite honest, this is probably where you would have gotten in, and this would have been where you would have gotten smoked. I'm not gonna lie. That's this would be a valid loss. You can't do anything about this. Um, however, what I saw was price come up again, push down, nothing there. Price then creates a ceiling. Well, and then we're able to break lower to the downside again this point. Once that point is broken to the downside, now we're pretty much bearish. And entry should have been here. Obviously, you can see the time. I'm asleep at 4 a.m. So this was the next valid trade. Here, you would have covered the equal highs, and your target would have been 2 standard deviations of this push up. Why, why are we using this push up? This would have been the liquidity, and the price would have taken here. And that's the target. And you can see we pretty much smacked that right down on the head. So those are pretty much the 2 trades available for both gold and for copper this week. And one was on Monday, one was on Friday morning to 4 a.m., which I'm asleep, so I'm not gonna catch that. And I guess you could probably also kind of take this. So this one's where's your stop going on this, right? Unless as you get in here, but that doesn't make any sense because it's the take profit isn't far enough. So those are pretty much the 2 main ones. For two really good ones for copper, and then as well you have the 2 for well this yeah 2 main ones for copper, and you also have well there's this one in here as well, which your take profit isn't going to be as good. So if you remember, we said this was the standard deviations that we're looking to take. We've already hit those 2 standard deviations. Now it's a matter of how can we get in and where are we going to. So this one in here, which is you have a floor, like this, right? You have a floor, clearly push down lower. Well, not really lower, but into the floor. You have a break of structure, or what we would call an indication. Indication. So indication, correction, and now you're looking for the continuation. So the moment price pops back out here, we should be looking for entry. 5:15 a.m. If I wait till 7 a.m., it's still valid technically. Or if I wait till 7:30, it's still valid. Stop below the low. Target is I probably would have looked to target here. The only other thing we could have done is this 2 standard deviations of this specific move. Like that. And you can see we come up to that pretty much perfectly. And that would have been a 6.2R. So really and truly, there are 3 trades on copper, as well as 2 on gold. And this would have been Wednesday morning, 7:30. And yeah, that's pretty much it for all the trades that were possible this week. I'm not gonna go through NASDAQ, mainly because I don't really look at NASDAQ. I really only look at copper and gold. I may think about getting back into natural gas, but because of the war, it's not looking too good with natural gas. It's just too volatile because Trump is on back and forth about opening it, ceasefires, and then it start back again. So I'm not getting involved in that. So yeah, gold and copper for right now are pretty much going to be the only 2 assets that I'm trading, which is metals, commodities, and make my life a little bit easier than not. So yeah, that's pretty much it. I'm going to be looking forward to this week to see what trades I can get. But really and truly, it should have been an extremely profitable week. Instead, we just had a normal profitable week. So, moving forward.